Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope everybody had a very beautiful day. And in today's markets, guys, well, there wasn't much in terms of macro events. That really comes tomorrow. We have the ISM Services PMI, which is going to bring us some nice insights into services inflation, which has been remaining fairly sticky over the past 4 or 5 months. So very curious to see if that is going to change in tomorrow's services report. Now, across the board, in terms of our technicals here, guys, it was a fairly muted day. Not much outperformance in terms of SPY and QQQ. SPY only up about 0.11%, QQQ up about 0.27%, but we did have some fairly healthy rotation in the markets currently. No real big red flags. The story for me, guys, is the current decrease in yields. We're having a very, very rapid decrease in yields right here, and we're really trying to go for that weekly downtrend on your 20-year and the weekly downtrend on your 10-year as well. And I just want to say, guys, that usually when we get a very quick decline in yields, such as the one we saw over the course of the month of May, that usually is preceded by having some very nice rallies in equities thereafter. Take a look at this period in the month of May for your 10-year yields, right? That translated into a very nice gain for the month of May in equities. So far, though, we've had some very, very steep declines in the past 4 days of trading, but we really haven't had such a manifested rally in your equities markets, somewhat still muted. So I truly do believe, guys, that if yields do continue their rapid pace of declines like we've been seeing, we should be getting that next leg up in equities. So all in all, looking very, very nice for a swing trade opportunity to the long side. Now, in terms of today's video, guys, we're going to go over a few things together. I do have one earnings report that I've prepared. That is going to be Crowdstrike. We're going to cover their earnings as they just came out fresh off the close. And then we're going to go into our usual technical analysis rundown, guys, in terms of our major market indexes. And lastly, our big tech names and see how everything is shaping up. So without further ado, guys, let's get right into today's video. So as we said, SPY up about 0.11%, QQ up about 0.27%, financials a little bit down, but healthcare did have some nice little movement to the upside. Take a look at your heat map here, guys. You'll see that it was a fairly balanced market. Big tech doing a lot of outperformance on the day. NVIDIA, AVGO, your largest semiconductor plays, moving nicely to the upside, but the rest of the sector kind of getting left behind. Consumer defensives having a very, very solid day. Healthcare as well. Financials a little bit down, although your credit cards were up, the banks were down, and the bottom half of the market here, guys, industrials, cyclicals, and all that good stuff was a fairly mixed trade. Now take a look at the one-day relative. You'll see that even better how mixed today's session was really just a story about continued rotation. 5 sectors in the green and pretty much 5 sectors in the red. Very, very balanced market. Now, where do we stand on a 1-week relative? Even though the SPY has been relatively flat around these all-time highs, well, the markets as well, guys, very, very mixed still. Real estate, healthcare, consumer defensives have been net positives over the past week, but we still have some ones that are trailing behind, inclusive of technology. Yes, even though technology has been relatively stable, guys, you can see we are still at a slight decline in relation to last week. So very, very normal there. Now, before we get into more technicals, guys, let's go over Crowdstrike earnings right away. And they really had a very decent quarter, especially off the back of a lot of software and cybersecurity plays struggling over the past 3 months in terms of market performance. All eyes were on Crowdstrike because they are one of the industry leaders. So we were really trying to get some clues as to whether or not they were also going to signal a software industry-wide slowdown. And it was not the case for Crowdstrike. So very nice after-hours performance here, almost up 7% in terms of your after-hours gains. Very nice quarter for Crowdstrike, guys. Crowdstrike coming in with a double beat and a raise on guidance. So they beat here by EPS by about 4%, and they did beat on revenue by almost 2%. Now, what is the story of Crowdstrike? Well, take a look down here, guys. Crowdstrike was always a business that was outperforming in terms of top-line revenue growth, which is pretty much why their chart looks like this. However, the question was always whether or not the company could turn a profit and how fast could they turn a profit. Well, now finally, after being unprofitable pretty much since IPO over the last 4 years, they're finally into net income profitability. Take a look here on a quarterly basis here, guys, with today's quarter inclusive. That is now 5 quarters in a row that the company is net margin profitable. Very, very nice for the company, turning the corner towards profitability. In terms of their balance sheet, guys, really, really healthy balance sheet here. Not much debt at all. So even though they were an unprofitable company, they really didn't have to build up that much of a debt pile while they were an unprofitable company, right? Cash and cash equivalents currently sitting at a cool 3.5 billion, only about $800 million worth of debt. And they're really starting to bring up this free cash flow here, guys. Take a look at your free cash flow. The middle column right here has been growing steadily for the past 5 quarters, and they've just generated a record quarter of free cash flow again. So let's take a look at some of the numbers here, guys. Then we're going to do some rough analysis on the company. Here is pretty much your earnings rundown for them. So looking very, very good. They pretty much beat everything across the board. Revenue coming in pretty much above the consensus, right? 921 versus 905, beat on revenue, beat on operating margins as well. A very nice indication of their profitability going up, beat as well, beat on EPS we just saw, beat on the free cash flow expectation, 322 million versus the 315 expected. Very, very good free cash flow numbers. And they even had a nice little uptick here in their ARR revenue, which is annual recurring revenue, since the company runs a annual subscription model, of course, right? Now, here is their guidance. So they did a great job on this current quarter. Now, how do they see guidance for the next quarter and the full year? Well, you can see here they raised on everything for Q2, raised on revenue, raised on operating margin, even though it's the same, and they did give a slight little guidance raise on EPS. Very, very good. And for the remainder of the year, the parallels are quite similar as well. Now, operating margin, tiny little bit down to 22.6. That's a slight miss there, but they did have a nice little uptick here on their forecast for revenue and a nice little uptick on the forecast for EPS. All in all, company doing very good things. Now let's take a brief look at their investor presentation too, and you'll see the company is really growing in the right direction, right? Moving up in terms of annual recurring revenue. That was up 33% year to date, or year over year growth, excuse me. Their net new customers, so how much new annual recurring revenue subscriptions do they have? You can see they've increased that by 22% year over year. These little green boxes are the green boxes on top of this scale right here. Great growth in subscription revenue as well, 34% year over year, which gives them a total revenue bump of about 33% year over year. Very good. Now, let's dive into the profitability metrics. Since this is a company that has just now turned the corner into profitability, these metrics are absolutely crucial to understand. So subscription gross profit, guys, it's going up, but we're maintaining the same margins. Very, very good. What you would not want to see is margins being eroded as revenues go up, costs go up. You want to see revenues be able to go up faster than the costs are expanding, right? And that shows that your gross margin is roughly the same. Operating income, they're pretty much how profitable are they coming in terms of just gross profit minus cost of doing business, right? Up a very healthy 5%, guys, right? It used to be 17% net margins, or operating margins rather. Now it's 22%. So this is moving up in the right direction. Very, very healthy. And here's your massive increase in free cash flow, guys. 42% year over year increase in free cash flow from the Q1 2024 to this current quarter right now. They run one tax year ahead, and their free cash flow margins, guys, improving as well, 33% versus 35%. This is just measuring in terms of free cash flow versus total revenue. So very, very good. Now let's do a quick little analysis into their costs. Let's see if I can blow this up enough for you guys to see. Well, when I do that, it kind of takes away the numbers. Let's just look at total revenue. What I'm looking for here is, does the company have operating leverage? Are revenues increasing faster than expenses in order for them to keep compounding profitability upon profitability, right? We want to see those profitability margins expanding. So take a look at total revenue. That grew 33%. Now their cost of revenue, right? Cost of goods sold, that was also up 33%. So their variable revenue right here in relation to the goods sold is roughly up in line. Revenue's up 33%, and the operating expenses are up 33% as well. So no change there. However, what we want to see as well is their operating expenses such as sales and marketing, R&D, and then your general and administrative spend. That is the important category, guys. And this one is only up 27%. So revenue far outpacing your operating expenses, even though it is in line with your cost of goods sold, right? So this is a very, very good thing. It just goes to show that yes, the company is currently rounding the corner to profitability and trying desperately to keep costs down as they expand revenue ever so further. So all in all, guys, Crowdstrike, very nice quarter, very nice guidance for the future. My only thing with this company, guys, is the valuation. The valuation is a little bit rich at the current price of about 325. Now, in terms of the valuation, guys, they are growing revenue and EPS at very high growth rates. It looks extremely good, and we can see that when we pull up the growth metrics right here. Take a look at this EPS expansion, very healthy EPS expansion, and also the revenue expansion is going to be very significant over the next 3 to 4 years as well, which gives them these very nice over 20% double-digit gains for the foreseeable foreseeable future. Now, that gives them a 2024 forward PE at $325, the current share price of about 82.69. At a first glance, it appears to be a high number, which is why we really have to divide this number by their growth rate to get the PEG ratio. It just allows us to compare different stocks across a common valuation metric. And you can see here that their PEG ratio is about a 3.06. That is quite rich, guys. Even for a company that's growing so fast, anything above 2, guys, is pretty expensive. And when we come into over 3, unfortunately, I'm just not a fan of making a bid at this company. Even though the share price could continue to go up, guys, I really need to see a cheaper valuation for this stock specifically. In terms of our technicals, however, guys, the technicals are not looking bad whatsoever, right? We had a very nice retest of the all-time high region right back here at around 293, all the way down to about 272. And the valuation down there is a little bit better. It's not good, but it's a little bit better than it is now. So unfortunately, Crowdstrike is a little bit of a pass for me. Maybe when we revisit these levels, I could be tempted for a little bit of a swing trade, guys. But if you ask me, my favorite 2 cybersecurity companies right now, number 1 is probably going to be Fortinet, just because of the valuation, right? The valuation in or around these share prices is really good, under a 2 PEG ratio, and also coming down into a good area of support. There's also a lot of other names that we compare. Zscaler, although Zscaler, guys, is not yet a profitable company. Take a look at the right-hand side right here. They're just coming into profitability now, only 1 quarter. So still unprofitable. Their PEG ratio is under 2 as well. Take a look at Cloudflare. We did those a couple weeks ago. Their PEG ratio extremely high, even though they are coming down into support, guys, just an extremely high valuation. So I like to find stocks that are coming into big areas of support, but also that have a very juicy valuation. Now, here's one that you may not have thought about, guys, and is one that I'm really considering potentially taking a starter position in, or at least maybe trading some short puts, or maybe even some debit call spreads and looking to ride this one higher. This one is Qualys. Qualys is a very, very solid name. Their main partnership is with Microsoft. Microsoft's Windows Defender antivirus platform. Most of that, or a portion of that rather, is powered by Qualys's internal software. So very, very solid company, currently looking to set the monthly higher low right now. And if we also take a look on the weekly is looking quite good right now, coming down to the support, tagging the 200 weekly moving average. This company usually only tags it a couple times before mounting a leg higher. We are coming down to weekly oversold conditions, guys. Let me move myself over right here. You can see we're on weekly oversold conditions. This company really doesn't hit weekly oversold conditions except for one time back here in 2016, and that was a great buying opportunity. Weekly oversold conditions, daily oversold conditions as well. So very, very interesting. Weekly and daily oversold conditions coming down into a juicy area of support as well. Could be a very nice swing trade opportunity. And in terms of the valuation, guys, well, let's pull up Guru Focus, one of the best platforms to analyze stocks. They have a Guru Focus rating of 100 out of 100, guys. This is a very, very rare score, if you ask me. And if you take a look at their valuation metric right here, it does say that the stock is undervalued currently at its price of about 130. They have a price target of roughly $177 on this one. All of the metrics, guys, for this company in terms of financial strength, profitability, growth, everything is pretty much a 10 out of 10. So very, very strong company on a very strong dip. Definitely inclusive, definitely one of the cybersecurity plays that I will be looking out for in the next coming days and week to come. So hopefully that was insightful for the Crowdstrike earnings. Hopefully you guys appreciated that. Now let's run right into our technical analysis setup, right? So moving into SPY, not much has changed. We are still in this daily downtrend right now, right? Daily downtrend on the SPY, and the bulls are looking to change this daily uptrend into their favor. Take a look at the 4 hour. The 4 hour is looking quite good, guys, for a potential recapture of this 4 hour uptrend and a potential swing into the highs. So it is looking very good, guys. Now, we would need a break of yesterday's high. That would really give us the daily uptrend shift back to the bulls, and then we'll be looking to smash these all-time high levels. Keep in mind, guys, as I've been saying, I think equities are lagging behind your yields because after such a sharp decline in your yields, equities really haven't rallied much, have they? So I am looking for that potential leg push forward on the SPY and on QQQ. However, if for every which reason, guys, we fail this attempt at a daily trend change and make lower lows, I've been saying this for a couple weeks at a time right now, just going to be looking for weekly consolidation, looking for that weekly higher low, anything above 493.53, just looking for that weekly higher low for the future trend change. All of this all-time high previous resistance, is now acting as support. And you also have your 12 EMA right there. So all in all, SPY not looking bad at all, really holding the best that it can above our previous area of resistance, which is now support. Now moving into QQQ. QQQ also looking quite decent here for a little bit of a swing to the upside. So daily downtrend is still in motion. The bulls are trying to make an attempt right now, trying to create as much space as possible between us and these lows to try and shape up for the daily trend change. Take a look at the size of this bounce in relation to our most recent lower high. The bounce is very good, guys, almost getting up to about 78%. That gives the bulls a very strong probability of being able to set the daily higher low and smashing for the new daily uptrend. At this point, daily uptrend break will be the break of yesterday's high and today's high, roughly about the 455.50 level. So looking very good. Even the 4-hour chart is looking very good. Tightness into a breakout potential. But if for whatever reason we fail and get plunged into the furtherance of a daily downtrend, you guys know the drill. Just looking for a weekly higher low for further trend continuation. All of our prior all-time high resistance should be acting as beautiful support. And you do have the 12 EMA right down here at about 444. So looking good, guys, for the breakout of the all-time highs, retest, and potentially run off the back of those decreasing yields. Now moving into financials. Financials not having the best day today, 0.46% to the downside. So financials are unfortunately still stuck in this daily downtrend. Right now, they are trying to make the daily trend change attempt. Keep an eye, 100% bounce off the most recent leg of selling, which is an engulfing move. So they have taken back 100% of the move. We are looking to set the daily higher low and run. How do you know that this daily consolidation down is finished? We need to see a recapture of the hourly trend change. If we get the hourly trend back in our favor, we'll be looking for that daily trend change attempt, and breaking 41.65 would give that to the bulls. Looking very decent. What are we in right now, guys? Well, even though we're in a daily downtrend right now, we are still just looking for weekly consolidation, weekly uptrend, just looking for that weekly higher low, anything above 40.2, weekly higher low for the potential trend resumption by the bulls. No real red flags as of yet on financials. That would come if we break these lower lows, guys, and then we'll be really struggling to maintain the weekly higher lows at 40.2 to maintain the weekly uptrend potential. Now moving into healthcare. Healthcare also looking quite decent today, 0.29%. Heck of a bounce on healthcare here after getting crushed last week. Great little rally recovery. And now, you know, after we had lost this daily uptrend right around here, right? We lost it by losing these lows. The bulls need to get it back, and the size of this bounce is extremely adequate to do so. Keep an eye on the fibs, guys. 78% bounce. It gives the bulls a very high probability when this move tops out of being able to reset a higher low into higher high trend change. Looking very good. If we fail from here and curl over to the downside, expect these moving averages to provide some support. 143 down to about, well, you know, all the 143 price range for the daily higher low for the trend expansion. The best case scenario is if the bulls can really push this a little bit further, maybe get stopped out here at your resistance line at about the 146.50, excuse me, and then retest this area of support and run. That would be a very nice trade, guys. Getting above this level right here, huge area of support in the past. So that's why we're looking to really mount above it, sit on it, and then potentially retest for the weekly trend run. Moving into semiconductors right now. Semiconductors really looking strong, right? Very nice daily uptrend right now. Healthy daily consolidation, and we're really just tightening up at the top right here. It's a good thing though we're tightening up above the all-time highs and really using this 12 EMA moving average as some nice consolidation support line, right? So nice little area of confluence, the EMA and the support line. If ever we were to lose this and plunge a little bit further, guys, into a daily downtrend, no big deal, guys. Just looking for that weekly higher low for the potential weekly trend continuation here. Keep an eye if ever we do consolidate a bit more here, guys. 229, 227, or 229 to 225. I do believe it's going to be a very nice swing trade opportunity if you're into the semiconductor trade. So looking very good, but the bulls still in control right now. We're just really looking for this daily uptrend continuation. No real red flags. Moving into IWM right now, 1.29% to the downside. And it's very funny, right? Yields have been coming down significantly, but the Russell really hasn't moved. So a little bit of a lagging trade here by the Russell. Very wide range of trade over the past 2 weeks. Really caught in this choppy zone. We are retesting lows, 201.81. If you break that, daily downtrend simply continues, and your weekly consolidation simply continues too. What the bulls are trying to do on the weekly here, guys, they're trying to set up in a bull flag formation. So nice bounce, trying for the weekly higher low for the weekly uptrend shift and trying to attack this big 212 level prior support. That's going to be very big resistance, guys. So they're going to need a lot of momentum to break through that. Hopefully they can retest these lower ranges right here, 200, 197-ish, really get some support from this huge range of consolidation, guys, get some momentum down here and make another attempt at it. So far, not looking too bad for the Russell, just really healthy weekly consolidation. And now lastly, guys, tackling the Dow Jones. So the Dow Jones, a little bit of a bounce day today, 0.36% to the upside, very decent day of bounce. Now, Dow Jones, the size of the bounce is not yet fulfilling enough to really warrant the fact that the bulls have enough space to really reset this daily uptrend, right? The bounce is only about 38.2%, still a little bit weak. We really need to see the bounce come up at least to about 39,000, at best 39,300. That would set the bulls up really nicely to have enough space to reset this daily uptrend in motion. Now, if ever for which reason we fail, let's say we only come up to the moving averages and start rolling over. Well, the size of the bounce is not adequate enough to guarantee the bulls for a little bit of a retest, but at least we have a lower area of support that we're currently above right now that could act as some defense. 38,600 down to about 36,300 right there. That is your prior range of support. Should be acting as support anew. So if we can do something like this, could be good. But if ever we fail and roll over here, guys, well, you really need to keep an eye on these lows right here. Need to protect them. So crucial, because those are your weekly higher lows. If you lose them, unfortunately, you have lost the weekly uptrend. It would be a weekly downtrend and you would be in for monthly consolidation mode on the Dow Jones. Still a lot of space for that monthly consolidation, guys. Worst case scenario, we retest the prior all-time highs. But as of now, no signs of that. Lots of trade left before we do that. And since we do have a bullish lean on the rest of the markets, I would not be surprised if this daily momentum continues a little bit higher, creating some space for the bulls, and eventually they are able to recapture that daily. Now, moving into our big tech names, shall we? So Apple not looking too bad here, about 0.16% to the upside. So Apple, what we're going to be keeping an eye out here, guys, is we're currently approaching a very big area of resistance. This is your all-time high resistance range, right? On the daily looking very healthy for in terms of a daily uptrend right now. Any move lower, just going to be looking for a daily higher low, anything above 187. Daily higher low for the further trend continuation. Now, all eyes will be on Apple in about 2 weeks' time when they have their investor presentation day. They're going to be releasing a new suite of AI products. Think of AI integration in the MacBooks, iPads, and iPhones. Could be a very big refresh and upgrade cycle for a lot of consumers out there who have not wanted to upgrade to the newest iPhone or the newest MacBook over the past 2-3 years because the changes have only been ever so slightly incremental. Now, if Apple does a great job of presenting a new AI suite of products and people are really thrilled about them, that could lead to a lot of consumers upgrading onto the newest product in September, right? In terms of the iPhone, which could generate a ton of new revenue for Apple. So that's what we're on watch on right now. No red flags for the bulls right now. Even if we were to consolidate a little bit further into a daily downtrend, no problem at all here, guys. Just going to be looking for a weekly higher low for the potential weekly trend change. If we do start consolidating, guys, 185 right at the start of the moving averages, that is probably the extent that the bears can probably drop this one down to. Now moving on to AMD, give me a quick second. All right, so moving on to AMD, guys. AMD not looking too bad, about 2.18% to the downside. Still, guys, trapped in this range of consolidation, right? 175 to the upside and pretty much 158 to the downside. Trapped in between right now. This area of support is currently still acting as a nice reaction zone for the bulls, the red box, 165 down to about 157. We're still not through that yet. However, if we do start breaking under here, guys, unfortunately, daily downtrend will be confirmed at that point, guys, and we will be looking for further weekly consolidation. I'll remind you, AMD was in a weekly downtrend. So far, so good. We've made a nice bounce attempt right now. Now the bulls are probably looking to set that weekly higher low and get the weekly trend change in motion. AMD has been one of the peer sectors, right, of the whole semiconductor trade that's really been left behind. Them and Intel, while every single other name is close to all-time highs, even the ones that people don't trade that much, right? Texas Instruments, close to all-time highs. Qualcomm, pretty much all-time highs right now. And the list goes on, right? SMCI, they've been left behind a little bit, but I mean, they've had a tremendous rally so far this year, so can't say nothing bad about them. Even ARM, right? ARM is almost back to the all-time highs. Tremendous little rally right here. And the list just goes on, right? We can go through them all. Applied Materials, all-time highs. AVGO, all-time highs pretty much. And the list really just goes on. It's really only AMD that's been struggling to maintain, but I do believe that that will come to an end and AMD will eventually get its rally. So for the time being, guys, I am still interested in playing AMD trades, looking for short puts 155 down to about 150. Would love to pick up some shares of AMD down in this lower location right here, set the weekly higher low, and then give us a new weekly uptrend. So all in all, not looking too bad, just a little bit, getting a little bit impatient, and I understand you guys, right? We want to see this one break one side or another, and when it breaks, I do believe it's going to break hard. A break hard down here could be all the way down to 150, but a break to the upside, guys, and we are really going to this 180 level of resistance. Moving on to Amazon right now. Amazon with a very healthy day, 0.56% to the upside. Daily downtrend currently in motion right now. What Amazon is looking to do is we're looking to create enough space in relation to our most recent lower high right here, 183.76, to reset this into a daily uptrend. So far, so good. The bulls are reacting nicely from this lower range, guys. This is why I've been saying 177 down to about 175, very juicy area of support for the bulls. That's why I've been swing trading Amazon with short puts so aggressively in this location right now. Still in weekly consolidation, still hunting for that weekly higher low for the eventual weekly trend continuation. How do you know the weekly higher lows are set? Well, you need to see the daily bulls get that trend change back. I do maintain, guys, this green box is a big one. I don't believe the bears are going to be able to get back through it to the downside. Huge prior all-time high resistance, and now we're finally using it as support. So very nice trade location for Amazon. Moving on to Google now. Google up about 0.41%. Very nice day for Google, even though they are in a little bit of a daily downtrend right now. That is perfectly fine, guys. So daily downtrend, you guys know the drill. Just maybe looking for a lower high into lower low. Now, if the bulls can bounce a little bit more, they set themselves up for the nice daily trend change. And you guys know we just continue mounting on to the all-time highs, right? It's a beautiful weekly uptrend right now, hunting for that weekly higher low for the continued trend expansion right now. But if for whatever reason Google fails and we continue this daily downtrend, there is so much space here, guys. Anything above 165, just gonna be looking for that weekly higher low for the trend change. My preferred trade location for Google specifically is we can get as close as possible to these lows right here, 165. That's where I'll be looking to make a little bit of short puts. I don't believe the stock is actually gonna get there, but if we can dip down maybe to the 170, maybe that could free up maybe the 166, 155 strike for some short puts. Moving on to Meta right now. So Meta, a little bit of a challenging day here, flat pretty much, 0.10%. Meta is still just stuck in this tight range of consolidation, looking for a break either one way or the other. Looking very good though, guys. If we do have a bullish lean on the rest of the market, I would not be surprised if Meta does have the juice to finally break this location in the next couple of days of trading. A plus 1% day on the SPY for all intents and purposes, right? If we get a plus 1% day on the SPY and the QQQs, I really do believe that that is going to propel Meta to pretty much break this 282 location, and a trade setup could be the breakout, retest of this range, and then run. This retest entry is a great trade opportunity, guys. The buy is here. The stop loss is down here at around 460, right? So you're only really risking $20 worth of downside. And we're targeting the all-time highs as our first take profit. So 480 to 460, that's about $20 worth of risk. And to the upside, we have about $50 of upside. So really a 2.5 reward to risk trade. A very, very nice trade opportunity. The other trade opportunity that I'm eyeing is if ever we fail and break below this 462, get us a daily downtrend, well, the bulls are just going to be looking to set the weekly higher lows for the eventual weekly trend change. And those could be targeting probably around the 450 mark. So if we do start to revisit the 450 mark, could be a juicy trade opportunity, guys, to then be able to long from there. That would be a touch of the 26 EMA. If we do revisit 450, the stops go below the lows right here at about 420. So you're risking about $30, and the trade is pretty much the all-time highs as well. So 450 to 530, you have about $80 worth of upside, and you're only risking pretty much $30 to the downside. Once again, a very healthy 2.5 reward to risk. So the trade setups on Meta are very juicy, even though we are in a tight range. So watch for one of those two break scenarios. Now moving on to Microsoft. Microsoft reacting very nicely here today, once again, from our big range of consolidation, right? The bulls really don't want to give back too much. Microsoft is in a daily downtrend right now. We are looking for the bounce. So keep an eye on the bounce, guys. The 4 hours is looking primed for a little bit of upside explosion, right? So looking very good, possibly starting a recapture leg right now. Daily downtrend will look for the size of the bounce, right, in relation to our most recent lower high, 431. If we can get at least above these moving averages right here around 421, 423, that would give us enough space to eventually be able to reset this into a daily uptrend. So Microsoft looking very good for a little bit of upside break here, guys. One trade idea could be the looking for the daily higher low. If we do get a nice little bounce and we retest this 415 level, which is pretty much the top end of the range of consolidation, should be acting as support. This little retest area could be a very good swing trade, guys. 415, your stop loss goes at 405, so you're pretty much risking $10 to the downside, and the upside potential is pretty much around the 435 all-time high mark. So you're pretty much risking $10 to get $20 worth of upside. Could be a very interesting trade idea. No red flags on Microsoft just yet. Still just looking for that weekly higher low for the continuation of the weekly uptrend. Looking very, very healthy. Now, moving on to Netflix. Netflix still just consolidation sideways pretty much, right? Sideways, slightly down, however you want to look at it. It wasn't a very gorgeous daily uptrend. Consolidation a little bit. Trying to double bottom right here. Now, if ever Netflix pulls the lower high into lower low, setting up for a daily downtrend, guys, not too big of a deal. Look how much support we have. Prior resistance, this whole area is going to be huge support for the stock. So even if Netflix takes a little bit of a breather after 3-4 weeks of monstrous rally, just going to be looking for the weekly higher low, guys. Anything pretty much above 542, right? Just looking for that weekly higher low for further trend continuation. The bottom end of this range is the one that I'd be targeting for some swing trades, talking about 610, 605, right where that 12 EMA is right there. The bottom end of this range of support, looking like a very, very juicy trade opportunity. But Netflix looking very good. I would not even be surprised, guys, if they just bottom out here and then proceed to continue to rally. And if that's the case, if we do set the weekly higher low right here and run, you're looking for your all-time high retest of about 690. That's the next area of resistance. Moving on to NVIDIA right now. So NVIDIA not looking too bad either, 1.25%. NVIDIA just continues its monstrous rally to the upside, looking very, very good right now. So NVIDIA pretty much breaking above our all-time high, daily uptrend healthily in motion. If we start losing this, as soon as we start losing the momentum right here, still just looking for a daily higher low. Anything above 1,071, daily higher low for the continuation of the daily uptrend. Now, just to play devil's advocate, right? What happens if we fail and then start rolling over? No problem at all here, guys, right? Just going to be looking for that weekly higher low for the eventual trend continuation. So let's say NVIDIA starts to get a little bit blow off toppy and starts reversing these into a little bit of a consolidation, and the money rotates into different sectors or different names within this sector, some names potentially that have been left behind. Well, I do believe, guys, that the potential retest right around here, around the 1,050 mark, should be pretty juicy. That is right where your 12 EMA is. I'd be hard pressed to believe that we're going to retest these previous all-time highs, because that would be a heck of a move down, guys. 17%. Not expecting that. Maybe somewhere between here, though, between the 12 EMA and the 26, right? So pretty much, let's take the midpoint right here, about 1,040, 1,050 could be a nice little retest spot. Now, moving on to Tesla. Tesla did everything in its power here today to try and break out, right? I even had something labeled on my chart. Very tight range of accumulation, was looking for the break to the upside with the rest of the markets. We got it, and then the bulls rolled over, unfortunately. So still really trapped in this range of consolidation. I did take a play on Tesla. We'll take a look at that at the end of the video here today, but still just trapped in this consolidation, right? 173, 172.50, guys. This line right here is crucial for the bulls. We are trying to shape up into a daily trend breakout pattern, after which we will probably be attacking the higher 200 level. But break it to the downside here, guys, and unfortunately daily downtrend is started anew, and then we really start looking to our lower areas here of support, talking about 165 down to 160 to really save the bulls from potential disaster, right? We have the weekly breakout tightening range right now. If you were to close below this 165 region with a weekly candle, it would be, unfortunately, the start of a weekly downtrend with a final support area at around the 160 level. We do not want that. We want tight range of consolidation and a break to the upside, break 185 to the upside, give us the weekly uptrend confirmation, and let's start recapturing some levels on Tesla. So the bulls still with a lot of work to do, but could just be a case of rising tide lifts all ships. If we do get that next leg up in SPY and QQQ, I don't think Tesla will be left behind, guys. That could be a nice little momentum rally for Tesla. Moving on to Palantir right now. Very healthy day on Palantir, 3.66% to the upside. No real news at all, right? So looking very, very good. Daily uptrend, finally recaptured, barely recaptured, but we did recapture it. So daily uptrend in motion, healthily above all three of our moving averages, which were kind of keeping us down as of the most recent couple of weeks. Very healthy move on Palantir. Next area of resistance is 23. I would like to see the bulls pull right up into the 23, guys, because that's going to give us some weekly momentum lift. If we can pull up into 23 here, guys, you can see the weekly candles trying to break above, almost in a weekly uptrend. Consolidation around 23 would be that weekly uptrend move. So looking very, very nice for the breakout on Palantir right now. I continue saying, guys, as we're in these lower levels, 21 all the way down to roughly $19, great location to be playing some Palantir short puts. And that's what I've been doing for pretty much the past month and a bit at this point. Looking very nice for some follow through momentum. Now looking up for PayPal. PayPal lastly trying to get the job done today, but down about 0.2%. So funny enough, green candle, but a red performance day. So PayPal desperately trying, right, to reverse this daily downtrend into a new daily uptrend. So they've engulfed this move, looking good, trying to set up for the daily higher low and the trend change attempt. Hopefully they can use this area of support as the retest location before making that trend change attempt. One thing's for sure, I would like to see us get above these moving averages. All of them are at the same place. Even the 200, this green line right here, all of them are at the same place. So need to mount above these moving averages and start really attacking these higher levels, guys, 65 and onwards, right? Not looking too bad for PayPal right now, but a lot of work left for the bulls, especially when we zoom out and look at the weekly time frame, guys. With last week's weekly close was not looking too good. Weekly downtrend in motion. So now the bulls have to start everything from scratch here, guys. They have to get the daily trend back. Then when they get the daily, have to even get the weekly trend change back. So could be a little bit of a while, guys, before we really run into the 68 level once more for PayPal, unfortunately. But I do like the stock. If we revisit these lower levels, I'll be bidding pretty much 59, 58, 57 short puts. That's pretty much everything I had for you guys in terms of our market recap. Now let's take a very quick look at my portfolio for some trades that I made today. All right, guys, so taking a look at the portfolio, there was a few new trades that I did add. A lot of them are still the same. The ones that I added have the little blue dots. Those are the new trades for today. So let's go over a few of those very briefly. So we took the Tesla 167.5 puts. Those are going to be a very nice swing trade opportunity on Tesla. I don't really think that the bulls are going to lose this location right here, but let's say they do and I get assigned at 167.50. I will be making it look a little bit of a swing trade here on Tesla, right? I will cut my stop loss if ever we go below the 160 level, but I really like this trade location. So far, so good. Like the premium for it. Still have a decent amount of cushion, right, between us and the 167.5 before the end of the week. So looking fairly good here, guys, right? We have a bit of a cushion of about, let's call it about 4% to the downside, right? So looking very good on Tesla. We'll see what happens with this position. Finally starting to play Tesla a little bit more aggressively now. Now, we also wrote more square puts, so we closed the Uber trade. We had these 61 puts that we wrote earlier pretty much yesterday, right? So we wrote those Uber puts for, let's take it right here. Where are the Ubers? Ubers. Are they here? Can I find them? Where are they? All right, they're right here, guys. So we sold them for 28 cents yesterday. We were able to close that trade pretty much today for 12 cents. And what we did with that same capital, that same $6,000, is instead of waiting for 12 cents by the end of the week, we took that same 6,000 in capital and we wrote these square 62s and we got 28 cents for it. So looking very good, just looking to farm as much premium as possible. That's why we took this trade on Square. Decent cushion, and I like the stock around this level right here. Now, we also did a little bit of a call option set up here. And you'll see we took the Tesla 185 calls. We went with pretty much June 28th. So roughly about three and a half weeks out at this point. And we got about $5 on those. So once again, I'm really looking to have this bullish breakout pattern fulfill on Tesla. And I'm right here at the 185 strike. I'm targeting share price appreciation within the next 1 to 2 weeks, at least maybe to 185, 190. Any bonus is a lot better, of course, but I'm really targeting this guy right here around the 186 level. So if you do get a little bit of a rally here, guys, should be a nice play to get some good profits on this call option. Very conservative, only really went with a couple strikes out, so not that too much out of the money. And I will cut this trade loose if ever we start breaking down and really lose this 165 level of support right here within the next few days of trading, guys. At that point, I probably will cut the stop loss right there and maybe try and re-enter if ever we retest these lower levels. But I do think Tesla is really coming into a little bit of a floor right now. And then we did some credit spreads. So I'll show you guys these at a first glance. They'll look kind of weird when they're like this in the portfolio, but as you can see, I wrote a couple put credit spreads today on Intuit, Meta, and Microsoft. So whenever I do put credit spreads, guys, is usually on stocks that have very high share prices. So I'll do a little bit of a credit spread education session right here. So what we're looking for here when we do credit spreads, guys, is we're looking to make the same type of play as when we write cash secured puts, but obviously writing cash secured puts on these stocks is a very expensive thing, right? The 550s on Intuit would be 55,000, 46,000 for Meta, 40,000 for Microsoft. You need a very large portfolio to only be playing short puts on these. That is when your put credit spreads come into place. So as you can see, the one on Intuit right here, we wrote the 570 puts and we bought the 550 puts. Now my total risk right here is $2,000. But what is my reward? Well, my reward here, guys, is, I'll bring it up right now. You can see these even better expressed, is pretty much the credit that I got for this trade right here. So you can see that we wrote the 570s for 1167. And then we bought the 550 puts for about 512. So we have a total net credit of $655. What you want to target as a criteria to get into spreads, there is two things, guys. Because of the nature of credit spreads and because of the fact that usually you get most of the money, most of the profit comes towards the expiration date, that's why I usually do these things at least 3 weeks out. And what we're trying to do, guys, is we're trying and find a bottoming out location for these stocks. So Intuit is coming into a bottoming out process right now, 570, 550 location. That's why I'm looking to do these strikes right here. I do believe that in 3 weeks time, the stock should at least be able to be higher than my short put level, which is at the 570. If it's above 570, guys, I just pocket the full $655. So what you're looking for, number one, is for a stock to be potentially bottomed out. Daily oversold conditions on a stock that rarely ever hits daily oversold conditions, right? That is one of my criteria. So we're really looking to pick the bottoms on a lot of these plays, because to get the next point of credit spreads, guys, point number 2 is you want to be getting, in terms of premium collected, 1/3 of the width of the spread. That's how you know that you're getting good premium. What does that mean? $655 needs to be 1/3 of the amount between the spreads. This is $20. So as you can see, 655 divided by 20 is roughly 1/3, right? So as we can get closer to 1/3, that gives you the best probability odds and the best ROI that I think personally. The problem, however, is to get the 1/3 of the width of the spread. To get this premium, you have to be writing strikes, especially the short strike has to be very close to the current share price, guys. That's why we need to find these at relative bottoms. So that is my one trade on Intuit. I'll explain further with the trades on Microsoft. You can see here, we did this on Microsoft as well. So we do have a put credit spread on Microsoft too. 410 is the short strike. 405 is the long strike. We went with 2 contracts here, right? So let's take a look at the Microsoft chart setup. At Microsoft, I'm looking for the same thing. 410 is the bottom end of this range. 405 is all the way down here. I'm looking for the stock to maintain above 410 in the next 4 weeks, looking to play this reversal pattern. Now, how much did I get for those Microsoft trades? You will see it right here. We did 2 of these contracts, but let's do the math together and you'll see once again, I got roughly 1/3 of the width of the spread. So we got 578 for the credit, and then we got about 417 for the debit. Total width is about $1.61 in credit premium. Divided by the width of the spread, which is $5, you will get approximately 1/3 of the width of the spread. Very nice trade opportunity for Microsoft. Now, my total reward is $161. My total risk is $500. So by the end of June 28th, if it's below my strikes right here, I will unfortunately lose $500. Now, we can obviously roll these forward if ever that happens, and that's probably what I'll do, but that is the gist of the trade, right? So Meta is the exact same thing. So take a look at these Meta trades right here. Meta, I'm trying to do the exact same thing on Meta. We are trying to say that the 470 level, 465 rather, is going to be the bottom for the next 3 weeks, and we're looking for this trend breakout pattern. So you'll see this on Meta, the trade right now. I wrote the exact same thing, looking for 1/3 of the width of the spread. And you can see my short leg right here is 465. 465 is relatively close to the current share price. If you try and write your short leg, if you try to do the 455s, 450s, you'll see, guys, you do not get enough premium. You'll be getting $100 of credit, maybe less than $100, and you're still risking 500. It is just not worth it. That's why we need to be close to the current share price, but we need to be going with levels that we have conviction in that could be possibly a nice juicy bottom for the stock. So obviously, these are speculative trades, but you guys start seeing me throw these on more. You'll start to see me play these more often, guys, as we get more and more confident about inflation, more and more confident about interest rates. The reason that I took these trades, guys, specifically is just because of the phenomenal drop in yields that we've been having recently. I really do believe equities are due for a little bit of a rally here. So you can see the math on Meta is pretty much the same. For each one of these contracts, we got $7.99 on the short side, and we had to buy $6.42 on the long side. That gives us a total net credit of $1.57. Divide that by the width of the strikes. That's about roughly 1/3, right? It's fine to still be above 30%. You can have a few cents difference here and there, but the goal is to be as close as possible to 1/3 while still having a little bit of cushion to the downside, right? I have a little bit of cushion on these, depending on which one of these is, but not much. So we'll let these work. We'll really let these cook, as they say, right? But as of now, fairly happy with these positions. And that's pretty much the new updates of the day. Nothing else in terms of the trades changed. You guys saw all of those yesterday. So hopefully you guys appreciated that. Hopefully it was insightful, guys. If you did appreciate it, consider dropping a like on the video. We'd really appreciate that for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these videos every Monday through Friday in terms of the daily market recaps. And lastly, guys, if you have any questions whatsoever, stocks, technical analysis, an options play you're considering, or anything you want, please leave it down below in the comments and I'll usually get back to you within the first 24 hours. So take care, guys. Happy trading. We'll see you tomorrow after the close. Peace.